Thanks everybody for being here. I know this is our couple years into doing all of these live webinars now. However, I typically like to be able to see the room where I'm at so I can judge people and get reactions to some of my terrible jokes that I usually tell and read the room. But nevertheless, thanks everybody for being here, and hopefully we get an informative session today on bookkeeping. So as Jennifer noted, so my name is Tyril Froese. I go by anything that comes even close to my name, given the pronunciation. I am a partner here in the Mississauga office, which is located right across from Square One. And I've been with M&P now for about 17 years. I actually started off in Brandon, Manitoba. For those of you who know where that is, it's actually the very start of M&P, the firm, and came to Mississauga here 3 years ago. I do lead our outsourced bookkeeping service line. Well, thanks, Annette. I really appreciate you still laughing at my jokes. And I'll laugh to myself, and maybe I'm laughing along with you, and I'll just pretend like I am as well. And today we're going to look at bookkeeping. And some of you may already have a business that started up. Some of you may be thinking of starting a new business, and hopefully we cover some of the areas that are relevant to all of you. By all means, if you have any questions throughout, please feel free to type them in the question and answer box. I will try to answer them as we go along, and if not, I'll answer them at the end. And I do have contact details in here as well, so that feel free to reach out to me at any point in time as well with questions that you might have, and happy to help out. So some of the things that we're going to be covering today, we're going to look at the importance of bookkeeping. So why should we even care about this? You know, it's quite often one of the last things that business owners think about or want to think about when they're starting up their business or when they're operating their business. So what is the importance of bookkeeping? We're going to look at the difference between bookkeeping and accounting, two common things that are commonly interchangeable amongst a lot of people when they're talking about it. We're going to look at a bit of the bookkeeping process in terms of how does it work and what you're going to do when you are bookkeeping. We're going to look at maybe some in-house versus external bookkeeping, some of the software that's available, as well as some of the filing requirements. Well, we won't get terribly in-depth into some of the details of various different transactions. We could spend a couple days on this stuff. I know it's extremely exciting and riveting, at least for somebody who's involved in it. But if there's any more detailed questions that you have, feel free to post them up and we'll answer them as we go too. So the importance of bookkeeping. Why do we care even about this kind of stuff? And yes, the information will be available when the webinar is completed as well. It'll be available on the link posted on there as well. So what is the importance of bookkeeping? And in order to understand the importance of the bookkeeping, we have to look at who's going to be using the information that we have while we're bookkeeping. And in looking at that, we really have two types of users that are going to be looking at the bookkeeping information. We have our internal users and we have our external users. So for internal use, we have management. So in a lot of cases, as a startup business, the management is going to be yourself. Management is going to be, you're the owner, you're the manager, you're kind of everything. You're wearing all hats of the business. So who wants to use that? As an internal user, management wants to look at what's in bookkeeping. And why might management want to look at the bookkeeping of a company? Well, the answer is in order to be able to operate the business effectively, efficiently, and to make decisions that's based on the information that's provided within the bookkeeping. If you want to know, for example, what product line is selling better than others, on what product are you making the most profit, where are your expenses year to date, where are your expenses compared to last year, what areas do you need to focus on in terms of cutting back or improving on your expenses? So as the management decision-making tool, bookkeeping is extremely important in order to be bookkeeping, and timely bookkeeping is extremely important in order to be able to make those types of decisions. The accountants are also someone that you could put in either one of these tabs, either on internal or external, and they're going to want to look at your bookkeeping as well in terms of looking at your filing requirements. They need to have the accurate bookkeeping in order to be able to file your HST correctly, file your taxes correctly, in order to be able to provide the advice and services that are going to be able to help you to own and operate your business, and also the owners. So in a larger company, when you maybe have separate management from the owners are also going to want to look at the internal bookkeeping in order to be able to help management in making those decisions as well. And they want to know, you know what, is there cash in the business that maybe I'm able to pull out of there to buy that vacation home that I'm looking at, or any of those other number of things. From an external perspective, you have the all-important CRA. And so CRA is concerned with your bookkeeping records because what happens? Some of you may already have a business that's operational, and some of you may have even been through a CRA audit. CRA definitely wants to know what your bookkeeping records are like, and they use that information in determining, was the correct amount of HST paid? Was the correct amount withheld from your employees that you have? Was the appropriate amount of income tax paid? So CRA is certainly a user of the bookkeeping, and it goes deeper than just the financial statements that maybe your external accountants provide. They actually go and they look into the detailed transactions that's contained within your bookkeeping records in order to make those determinations. So it's extremely important for CRA purposes to have proper bookkeeping. Your bank may also be a user of your bookkeeping. So the bank wants to know, okay, can I lend money to this business? Is this business sustainable? Is this, you may have covenants on currently borrowed debt that the bank is concerned about to making sure that they can continue to lend money. So the bank, vendors and creditors, definitely external users that are going to be using your bookkeeping information. So it may feel like a tedious task. It may feel like some of this information is not important, but as you can see from both an internal and external perspective, your bookkeeping is an extremely important part of your business and enabling you to manage your business, to make business decisions, as well as to ensure that you are paying and recording the appropriate amount of taxes and remittances to other bodies as well. So what's the difference between bookkeeping and accounting? And we hear this, like I said, interchangeable quite often, and it really is a little bit of a nuance. Sometimes they can be used interchangeably. However, the bookkeeping is more interested in the data entry of financial transactions. So you may have an expense, for example, that gets paid from your bank account. The bookkeeping for that expense is a simple data entry recording that transaction through your bank account in your general ledger, as well as on the expense side where that transaction should be appropriately recorded to. From an accounting perspective, then accounting is a summary of the financial transactions that flow up into the financial statements. So on the accounting side, you're looking more so at all of the transactions that have flown through the bank and the final balance and how that relates to the balance sheet and those financial statements. On bookkeeping side, you're dealing with factual data. So this is including an event that actually occurred. There was an expense that was incurred. It translated through a transaction through the bank account, and now that must be recorded. On an accounting perspective, we're dealing with factual and estimates at the same time. So from an accounting standpoint, you are concerned with those factual data entries, but there's also a lot of estimates that can be done. Those estimates can include such things as an allowance for accounts receivable, for example. If you have a customer that you made a sale to and you're waiting to receive payment for, and it may be doubtful that you might collect those payments, now there's an estimate in place saying that, well, we don't think that maybe we might collect on this receivable. And from an accounting standpoint, you would then record an allowance for that receivable, and it would show up on your financial statements from there. Similarly, amortization is something which is an estimate. So we have machinery, equipment, property, plant, or you have furniture, or you have computers, or any of those types of things that you may be depreciating on an annual basis from an accounting and tax perspective. And that's an estimate. There isn't an event that actually occurred. There is no transaction through the bank account. There is no sale. There is no expense that happened. It's an estimate to record the useful life of that equipment, as well as the related depreciation expense that goes along with that. So those are two kind of estimates that you might record from an accounting standpoint that aren't necessarily from a factual transaction which occurred. On the bookkeeping standpoint, it can be entered and performed by somebody without necessarily any formal training. Although certainly from an accountant standpoint, when we see the books that are brought inside here, we certainly would like to have some sort of training, including even maybe this session. And when you're recording those transactions, however, it can be done by somebody without any formal training, as it is just a factual data entry of a transaction that has occurred. From an accounting standpoint, it does require an in-depth knowledge of accounting framework and relevant laws. So for that allowance for doubtful account, for example, you need to know and you need to be able to write it off. For tax standpoint, you need to have an individual client that you can identify that is that allowance. You can't just arbitrarily write down your accounts receivable, and there are laws and rules that are required in order to do that, so that you can write it off from a tax perspective, that you need the relevant in-depth accounting framework knowledge in order to be able to look after those pieces. So those are kind of the differences between bookkeeping and accounting. And throughout this course, we're going to be talking about the bookkeeping aspect of things and sort of staying away from the accounting side, although the two kind of do interchange and can merge together, as we'll see throughout this as well. So starting from the top, sort of what is the process of bookkeeping? So the process of bookkeeping starts with some form of data origination. As we saw on the last slide, it is the factual recording of a transaction. And so there has to be some sort of origination for that transaction that needs to be recorded from a bookkeeping perspective. So what might that data origination look like? Well, you may have a point of sale system that you're using for a retail store, for example, whereby a customer comes in, they make a purchase, and that is recorded through your point of sale system. That is the origination of the transaction to be recorded in your bookkeeping system. So that point of sale, you have a sale, it either was recorded through your, it was a Visa transaction or a credit card transaction, or it was an actual cash or other transaction directly through your bank account. That is the origination of that transaction that then needs to be recorded. It may be a purchase order. So it may be that you have a purchase that you've made, and you've sent a purchase order, or conversely, you have an order from a customer of yours, and that is the origination of that data entry that needs to be recorded. Also, for smaller businesses, a lot of times your data origination comes from the bank statement. So at the end of the week, at the end of the bi-weekly, monthly, however it is that you're going to be doing this, you take a look at your bank statement, you look at all of those transactions, and every single one of those transactions from the business account must be recorded in some way, shape, or form. If it's personal in nature, it gets picked up as a personal expense or from the personal standpoint. If it's business related, that hits either your income statement or your balance sheet, and that's where you record all of your transactions from, so that at the end of the period in which you're recording things, everything gets picked up from that bank statement. And I'll say that's probably one of the key pieces when we're looking at bookkeeping, is ensuring that there's some sort of a formal process that you have for doing your bookkeeping. As I mentioned at the very start, it's often one of the last things that people think about or want to do at the end of the day. If you just started up your business, or if you have a very brand new business and you're the owner, you're the manager, you are the salesperson, you're cleaning up the shop at the end of the night, opening and closing it. It's often the last thing that you want to do when you get home at the end of the night, or at the shop still at the end of the day, that you want to record all of your transactions that occur during the day. And it quite often happens that at the end of the year, sometimes it goes even as long as 2 years, all of a sudden we get people coming in saying, help, I need help. CRA is asking me now for my tax return, or CRA is asking for my HST filings, and I haven't done it for the last year. Here's a box of everything that we have for the last year or two. Can you please go through it and help me out? So it happens all too commonly. It's difficult at that point to go back and to know what a lot of those transactions are. So especially if you're going through by your bank statement or you're going by your receipt, it's difficult a lot of times to look back at all of that and say, now, what was this that I purchased a year ago? What was this receipt for? And so I usually recommend, whatever it is, whenever you have some sort of time slot that you make to do your bookkeeping in, to sort of keep with that schedule in order to stay on top of things and make sure that it does get done so that you don't fall behind on that. There's the classification of those items. So this one, it's difficult for a lot of people too when they're starting up. The most common questions that we get are, how do I record this, or where should this be recorded to, or what happens? So on one side, it's usually fairly simple. You have a transaction that goes through your bank account. We'll go back to using your bank statement as the starting point. So we know that one side of your transaction has to be through your bank statement. On the flip side of it, we have either income and expense, or potentially on the balance sheet side of things where that other side goes through. So for bookkeeping, you do have a double-sided form of entry, which means that you always have something that's being recorded on the bank statement, something that's going in or out of your bank, and then you have the flip side of that transaction, which either you purchase, say, an asset for the business. You bought that computer that you're using in order to be able to do all of your day-to-day transactions on, or maybe you have an expense. So you paid for the rent for the building that you're in, or you paid for, the cost of some of your product that you are selling. So there's always a second side of that transaction that has to be recorded somewhere. And, it can be as simple as if you're using an Excel spreadsheet to record all of your transactions. And we'll look at some of the different ways to record and some bookkeeping tools to use later on. But if you're using, say, for example, even an Excel spreadsheet, it's easy to see that in one way, shape, or form, there has to be a balanced transaction. So there's an out from the bank statement in the case of an expense, and then there's either an asset that's increasing or an expense that's increasing. So there's always a double-sided entry that has to balance. And so it's a quick check for you when you're doing your bookkeeping. And if you're using bookkeeping software, it's usually very good at telling you that, hey, we need the second side of this, so it has to be classified somewhere. But if you're, just starting out, just to know that there has to be those two sides of pieces that you're looking at, and it's a quick check to know that you've recorded something appropriately. So whether something is income or whether something's an expense, that's typically, relatively simple in terms of if you've got money coming in, it must be because you either sold something or, you put some personal cash in, or maybe you got a loan from the bank. But there's always going to be those flip sides of the transaction, and where you classify that is equally as important. What I also suggest for people is that a lot of times, if you've got a transaction that you're not sure where it goes, it's quick to just send an email off to your external accountant or whoever is doing your year-end filings for you and just say, hey, where does this go? Or conversely, a lot of times what we see is that they have an account that says, ask my accountant. And I know QuickBooks has one of those accounts that you can set up in your chart of accounts. Or, if you're using Excel, you can just make an account that says, I'm unsure, ask my accountant. And so at the end of the year, as an accountant going through and preparing the financial statements or the tax return, we know then to look at those and just say, okay, what are these? And we can have a conversation then in terms of how they maybe should be appropriately classified. And then we have the recording of those transactions. So it's important that you have every single piece recorded. And I can't stress enough that having a separate bank account for your business is all important. At the end of the day, it's really difficult if you're using a personal bank account to go through and classify and record transactions through there, and to be able to sometimes know which amounts are business related or which amounts are personally related. So I strongly suggest to everybody when they are starting up a business that they have a separate bank account specifically for that business, so that you know that all the transactions that are running through that are related to your business, and they must be then picked up and or recorded somewhere. So that separate bank account, whether you're a proprietor, whether, if you're incorporated, you're going to need to have a separate bank account under the corporation. And a lot of times, when you're just starting up, you say, well, there's no money inside there. How do I do? Transfer funds from a personal account into that bank account. And you then have a transaction that took place that you can record that is factual from a bookkeeping standpoint. And you just say it was an owner injection, and you can treat it that way. But at least then you know that this money came in and that everything that's from there is still business related. So that's typically how I would say to do that. recording those transactions, making sure that on your regular basis that you're going through and every single transaction that's run through that bank account is recorded somewhere, because there's nothing worse at the end of the year going through and saying, well, my total, when I add up all of my transactions through the bank account, it doesn't match what the bank statement says I have. And then you've got to go all the way back throughout the year and try to find out, what did I miss? And am I paying too much tax? Or, did I miss something that could be of importance? Filing is something that is also of equal importance. And in today's day and age, digital filing, there's a lot of tools available for filing all of that information. But the filing of that information is equally as important, especially when it comes to something like an audit or when you have your accountant that's asking you a question. And so what I mean by that is that if you have an invoice that comes in, for example, and you want to say you pay that invoice, you record the transaction, what do you do with that invoice? Well, from a CRA standpoint, you're required to hold on to information for a period of 7 years. So that means that within that 7-year period, they could come back and they could ask you for a backup to support the expense that you recorded on your tax return or for HST purposes. And they then want to see a copy of that actual original invoice. So CRA does not accept Visa statements or bank statements as backup for those invoices and expenses claimed. And so they're going to want to see an actual invoice that you have. So it's really difficult if you've just stuffed everything inside a big box to be able to go back and say, here's the support for all of the information that we claimed. So what I recommend is having some form of a systematic filing system. So again, this could be as simple as having folders that are maybe related by month if you don't have a lot of transactions. So you've got your January folder all the way through to your December folder, and you've got all of that information inside there so that if somebody ever asks, you have that information that's readily available. It could be recorded or filed in the same manner as what your classification is. So it may be that something was recorded as a utilities expense in your bookkeeping process. And so you have a utilities folder that you keep all of those invoices for Electra or Enbridge or whatever it is that you may have. And so some form of systematic filing that you have so that that information is readily and easily available should you ever require it. And it's not even just for CRA purposes. You may have, for example, somebody that comes to you for a payment, one of your suppliers that comes to you for a payment and says, hey, we didn't receive payment on this. And if you have a systemic filing system, you can go back within that filing system and say, okay, here was the invoice we received from you. We have marked it as paid, and you have marked on the bottom of that invoice how it was paid and or the date that it was paid. You can then go back to your supplier and say, no, it was paid on this date by this process, and say, no, we're not paying this invoice twice. So it's not just from a CRA standpoint that the filing of it is important. It's also from your own perspective that having it filed in a systemic manner makes it much easier in order to run your business and to be able to go back at the end of the day in order to say that, yes, I made that payment, or conversely from your customers saying, you know what, here's our outstanding invoice list. We sent it to you on this date and it has not been marked as paid yet. In today's day and age, filing can also be done electronically. We get that question quite often, is that does an electronic scan of an invoice or a photo of it, does that suffice for CRA purposes? And the answer to that is yes. We have gone through numerous audits already at this point where CRA asks for information and all of the backup. I know QuickBooks is also very good at this, where you can also upload an invoice into the system to go as backup for a transaction, so that should you ever be required to pull it up, you have the transaction that you've recorded already, and you have the backup for that transaction all saved within the exact same spot. We do also use another tool for our own outsourced bookkeeping service line here at M&P. It's called Dex. And effectively, it's a software that allows you to take a photo and then files it away in an appropriate spot. And it stores all of that information for you. And it can upload those invoices directly into an accounting software like QuickBooks or Xero, and it handles some of that all for you. The important thing is that you have some form of filing system in order to be able to go back at the end of the day and just say, yes, I have this information and here it is, and it's easy to find, as opposed to having a box full of all your invoices and receipts in which something may get lost and you may end up paying extra to somebody or missing out on some credits with CRA and paying more money out of your pocket. The question about whether to do the bookkeeping internally or externally, it really varies on a business by business basis. Excuse me. You do have to consider the size and the complexity of the transactions which are occurring through your business. You know, quite often at the very start, it's an additional expense that you don't want to incur as a new business. And so it could be something that you look at doing in-house yourself. It could be you could look at having an individual come in as either a full-time or a part-time person. There's a whole host of different options that you have available to you. It's getting more difficult. What we've found in the current business climate and atmosphere is that it's difficult to find a good bookkeeper. And certainly if you're looking for somebody that comes in and is able to do that for you, you're looking for somebody that's got a lot of references, somebody who has, you know, the quality background and experience in doing the bookkeeping, because as equally important as it is to have this information, it's important that this information is getting recorded correctly and accurately as well, in order that you can look at that info and be able to make those best business decisions, as well as either not paying too much or missing out on things as well. A lot of times we have, you know, if in a smaller business, we do have somebody who's quite often a front desk person or an office manager who is recording those transactions. So because we noted it doesn't have to be somebody that has formal training in order to be able to do that, it can be somebody that is performing double duty, who has, you know, additional time. Maybe if they're sitting there, they're answering phones, or they're, you know, they're setting up customer bookings or doing those types of things, that at the end of the day or in their spare time, they're also going through and they're recording all of the bank transactions that have occurred, so that you don't have to have somebody who's specifically dedicated just to doing the bookkeeping. You can have somebody who's doing that as a double service as well, or that wears multiple hats. Software that you're looking at for this, there's a whole host of different softwares that are available in the bookkeeping sphere. You know, you'll see things out there such as Cashew, you'll see QuickBooks Online, Xero, that are the two, you know, big ones. But there's all sorts of various different softwares available that are either low cost or no cost. What I recommend is that, you know, you look at what type of business are you in, and does that software then service and meet your needs? For example, there's a whole host of softwares that may not handle inventory very well. And it may be that you have a retail business that handles a lot of inventory that you need to track, be able to record how much you have on hand, whether stuff is being, you know, you need to record whether stuff is being shipped to you, and you need to record inventory in transit. And there's a lot of the I'll call them basic softwares that may not be able to handle those types of inventory needs that you have. And so it's important when you're looking at that to be able to find a software that integrates both with your needs, as well as maybe integrating with your point of sale system. So if you have a point of sale system, there's a lot of software out there that can integrate directly with that point of sale system. And at the end of the day, it's a matter of a simple export from your system into your bookkeeping software to be able to record all of those transactions. And it's going to simplify your life greatly and be able to take some of that time off of your hands in order and from manually transferring a lot of that information from your point of sales into your bookkeeping software. So software out there, again, there's a lot that's available. The easiest ones and some of the ones that are very user-friendly in terms of starting up, that walk you through a lot of the transactions and how to record things and don't let you make mistakes, you know, stuff like QuickBooks Online or Xero. But again, there's a whole host of various different items out there that you can use. And if you're unsure, quickest way too is to talk to your external accountant, and they'll be able to tell you some of their clients that have used these software, if it's worked or not. You do also have the availability of an external accountant. So a firm such as M&P or lots of external accountants out there, we do bookkeeping for clients externally. So we don't even come into the client. we have transactions that are sent to us, whether it be via the bank statement, whether it be all of the invoices or receipts or point of sales integration, and it's sent directly to us. And we then go through and we reconcile all of the transactions to the bank statement. And your external service provider is the one who then makes sure that A, all transactions are recorded, B, all the transactions are classified appropriately, and C, that all of the filings are done on time. And so what that does is it also allows you access to some more forms of specialized services. So what you get, for example, if you're going through an external service provider, is somebody that's extremely knowledgeable in that service line, as well as someone who may be able to suggest and advise on your business for you. They might be able to say, hey, you know what, your cash balance is building up, or for example, we noted that every single month we have these payments that are coming out, and at the end of this month, it's going to be doubled up on these payments, and there's not going to be sufficient cash to cover this. So we either need an injection or, you know, some form of financing just to get through this end of this period. So you get access to those types of specialized services, and you also get the accounting integration piece. So for the bookkeeping clients that we look after, at the end of the year, we know that all of the transactions have been recorded. The bookkeeping arm simply transfers it over to us as accountants, and that information can then be used with which to do all of the adjustments for those estimations, as well as filling in the tax returns. And it's a simple process, and it can quite often save you money as well when you're getting to your year end for those types of filings. So the decision on the in-house versus external, again, it really is determined based on, you know, the size and the requirements of your business, what type of transactions that you have that are running through there, as well as, you know, do you need somebody that can be looking at this and maybe offering you some advice when you're starting up on, you know, what your business should look like and what your expenses are, and sort of getting some of that assistance in operating your business. So I did already briefly run through some of this, so I'm not going to spend a detailed time in this. In terms of the software, I mean, you have some of the off-the-shelf software. So what that means is that these are canned software that anybody can go and purchase, and they're not specifically specialized to any one industry or form. And really, they give sort of a broad overview and sort of a basic piece for any business. And for a startup business, these are typically great. You get QuickBooks, you get Sage Accounting, you get Xero, you get a lot of the cloud-based systems. And really, in today's day and age, from a cloud-based software, these are really good tools, and in that they allow you to access any of your accounting information from anywhere. So if you're at the bank, for example, and you're looking to get some additional lending or some funding, and the bank says, well, I'm lending it based on your receivables, for example. And you know, you can pull up your receivables right off your phone and say, here it is, here's a copy of my receivables, they're aged, you know, nothing's over 90 days, and we typically collect. And so the bank is able to then, you know, give you your lending right there on the spot, as opposed to having to wait, go back to your desktop computer and to pull up that information for them. You might be able to be out at a customer and they say, hey, do you have any of this inventory in stock? You're then able to pull it up immediately and say yes, and you can make that sale. And so the cloud-based software is typically a great tool now to allow you to be able to do some of those things and manage your business effectively from anywhere. And it really is a good tool because, you know, business doesn't stop. You know, you see the ads everywhere for that, and it doesn't tie you down to your desktop. There was a question inside there if I have any experience with Zoho Books. I do have one client that's actually on Zoho Books. They are a retail and service business, and it definitely has worked well for them. No concerns that I've seen in terms of their business operating out of Zoho. So yeah, that definitely is one of the options that's available as well. The customized software, again, we won't get into in great detail. These are for a lot larger organizations. You have Great Plains, Oracle, SAP, some of those larger softwares that are tailored to your business. For a lot of companies that have more complex business structures or that have large inventory requirements or those types of pieces, we do have a team that actually goes in and does a full-on exploration in terms of what software is going to be the most beneficial for those clients. And then we can customize those softwares. You know, you look at something like an Acumatica or a Microsoft Business Central or Sage Intacct, that's going to be able to assist those clients with their more specific needs, whether it be warehousing, whether it be, you know, importing or all of those types of things. There is very industry specific software as well. So for example, if you are in the rental business, if you have a large number of rentals, Yardi is a great software that a lot of people use in that industry. If you are a farm and you need to deal with some of the intricacies in terms of inventory surrounding, you know, births of cattle, or for the inventory around your grapes from the vineyard or those types of things, Ag Expert is great at dealing with that. Deltec Vision when you're dealing with professional services and firms. So there is a lot of software that's also available for very industry specific pieces. And so it's definitely worthwhile looking into when you're making that initial decision. And again, feel free to ask your external service provider to help you in some of those, because chances are they've seen them and will be able to tell you some of the pitfalls with those. So the filing requirements piece really goes back to the importance of your bookkeeping. So what are some of your filing requirements that you may have when you're running your business? So payroll may be one of your filing requirements. If you're a sole proprietor and you are only yourself, maybe payroll isn't a requirement. However, if you have staff that you hire, or you're a corporation and you yourself are on the payroll there, that's one of your filing requirements that you're going to need to look into. Xero, QuickBooks Online, all of those sort of softwares do have payroll modules that you can use. And those are really important for making sure that you're recording all of your source remittances and deductions on time, that you're recording and filing your T4 or any of those type of information returns on time. So the filing requirements for payroll, extremely important when you're doing your bookkeeping to have those all recorded appropriately. CRA is very stringent on the payroll side of things and assess steep penalties and interest when your filing of your payroll isn't done on time or the appropriate remittances aren't done on time. HST is another common one. It's probably one of the most common ones that people deal with. Anytime that your business has revenues, has HST-able revenues that are greater than $30,000, you are required to register and to collect and file HST returns. What I tell people is that, you know, and what helps a lot of people to be sure to do their bookkeeping on a timely basis is that when your revenues are under a certain threshold, you have the option whether you want to file your HST on an annual, quarterly, or monthly basis. And what I typically suggest for people is that, you know, to choose at a minimum on a quarterly basis. What that does is it effectively forces you to have your bookkeeping up to date at a minimum on every 3 months, so that you can file your HST return appropriately. And for those purposes, again, your bookkeeping is all important because you want to be able to have all of those information available to get some of those credits that are available on the expenses, as well as to ensure that you are remitting the appropriate amount to CRA. So the question we have also here is that if you have a seasonal business closed now, do you do T4s and T4 summary right away, or must you do it after December 31st? And so long as those T4, if you've laid off those employees, there is the record of employment that you do have to file with CRA. And, you know, it's probably appropriate to do T4s. There's no requirement to do it after December 31st. So February 28th is the filing deadline that all T4s must be filed by. So after December 31st, 2022, you have the requirement to file by February 28th. However, certainly you can file the T4s currently, so that at the end of the year, if you've got those employees that don't come back, that that it becomes again more difficult maybe to track them down or to send out those T4s, and you can do those right away as well. The actual T4 information return and summary, so long as you're sending that after February 28th, so that it has all of the information for the entire year, that's when you would do it. But you can issue those T4s to the employees. Corporate income tax is another filing requirement that you will have if you're a corporation, of course. That is due. So for a small business corporation, your corporate tax filings are due 6 months after the year end that you've chosen. So a corporation can choose to have their year end anytime that they choose. So once you set up your corporation, you're then allowed to choose your year end. And within 6 months after the year end, you're required to file your corporation income tax return. I will caveat that and say that as a small business corp, you do have to pay any taxes owing by 3 months after year end. However, the actual return itself doesn't have to be filed until 6 months after. And so typically what we see is that after year end, within a month or two, we get all of the bookkeeping information sent in order to be able to file those corporate tax returns. You also have your employee health tax, and you have all sorts of other requirements, say banking requirements. If you have funding from the bank, they will want to see your information and financial statements and potentially some of your bookkeeping information as well. And then Securities Commission, again, that's dealing with a larger business. But there's a lot of various different filing requirements that rely solely on your bookkeeping that you have. And it makes it all the more important to have your bookkeeping caught up and to make sure that it's done on a consistent and timely basis and recorded correctly, so that you aren't, again, falling behind in terms of filing requirements and then, not coming to your external accountant and saying at the end of it, hey, please catch me up. I'm behind for 4 filings, or I'm behind for this, and I need to get this done now. What I didn't touch on inside here is, as a sole proprietor, your filing requirements. So you are required to file, there's a business statement form on your personal tax return that gets filed. So you get, it's called a T2125 form. So all of that information then gets picked up on your personal tax filings and will go, your bookkeeping goes onto that form as well to pick it up as your business income and expense. So that's everything that I had for today. I know we did touch very briefly on some of the subject area, and certainly happy to delve into more details if anybody has any questions in terms of wanting to ask how something gets recorded, or again, different softwares, or all of that type of thing. But I wanted to give a brief overview on bookkeeping, why it is important, why, although you might not want to do it, why it is that it is important that you should do it, and what are some of the options available in terms of doing your bookkeeping. We get a lot of people, I say, so long as there's some form of bookkeeping that you are doing, it can be in Excel. I don't see many manual ledgers anymore. I know when I first started, which was a lot of years ago, we still saw some of the 14-column books that had everything recorded inside there. By all means, if that's what works for you, please go ahead and do that. But just so long as that you have some form of systemic manner that you are doing your recording and your classification of transactions in, that is key when it comes to making sure that you can operate your business, make those business decisions, and be able to be keeping the most money in your pocket and earning the most at the end of the day.
Thank you so much, Ty. As I stated in the chat box, we'll open the floor to any questions. One question that did come in from a participant that's unable to join today is, do you have any tips for simple strategies for keeping receipts organized?
Certainly, and that's something we did touch on a little bit inside here as well. And keeping those receipts organized, again, as long as there is some systemic manner in which you are keeping those receipts, it's great. For if you don't have many transactions, what you can do is you can keep them in a folder by month. And then what I typically would say was that keep a copy of your bank statement in that monthly folder as well, so that you have all of the invoices and receipts that tie into every single one of those transactions that's on that bank statement, and that it's a quick check and a reconciliation for you. So you can go through your bank statement and say, okay, I have this invoice, this invoice, this invoice. And if you're missing something, then it's a quick check for you to be able to go and say, okay, I need to get a copy of this because if CRA comes looking, I need to have it, or that you have that information readily available. You can also keep it in accordance with its classification. So I mentioned before, say utilities or rent or purchases for inventory or resale items, or any of those types. You can keep it in folders according to those, so that if somebody is questioning you on your utilities, you can pull up that folder and say, here's all of my invoices, here's what I paid, or here's what wasn't paid. And again, digital now is a quick and easy way that a lot of people are using in order to keep track of a lot of those invoices as well. It's easy if you have a, say, folder set up, even in Outlook. For example, if you set up folders for each of those things as opposed to the actual physical folders, and if you get emails in on certain expenses, you forward it into those folders or move them into those folders, so that again, it's kept in some systemic manner that you can then pull them up later on and be able to use those.
Great, thank you. And I guess too, also making notes on receipts when maybe details aren't super clear, especially on those carbon copied receipts that tend to fade over time.
Yes. And another key piece of that is marking on them when and how they were paid, as well as when things are received. So if you have a folder for, or a pile, quite often a pile on your desk for unpaid invoices, so that items that you have to look after or handle in some way, shape, or form, and then marking on them, you can get, it's just a quick stamp that you can get as paid and what date, so that how it was handled, so that later on it's not a question of whether something was looked after or not. You do have the backup to support it.
Great.
Another question here. I have spent business expenses on personal credit card and recorded it in the books as payables towards me. I can reimburse myself through the company bank account. So yes, you can certainly do that. Again, if you are, I'm assuming in this case, maybe it's a corporation, given the reference to the company bank account, and most certainly you can do that. So if you have paid for something personally, and it happens to everybody, you're out somewhere and you need to pay for something business related, and maybe you forgot your bank card or your business credit card at home, and so you end up putting it excuse me, on your personal Visa or credit card. And what happens then is that transaction is recorded in the business, so it is still a business expense even though you paid for it personally, and then the business strictly reimburses you personally for that expense. And so you have the transaction recorded coming from the bank and out to yourself personally, and the expense is picked up still in the business as that. So happens more often than not. It just makes sure that that's tracked, and that's why keeping on top of things on a regular basis is important, so that you don't miss out on that, because any money that's pulled out, say from your corporation, that doesn't pertain to an expense is going to be taxable to you personally. So you want to make sure that all of these pieces are recorded appropriately, so that it's just a reimbursement for yourself. Can you go over the sole proprietor tax form again? So yes, so that's so it's a T2125 form, which is the business statement for a sole proprietor. It does form part of your T1 package, and so that gets picked up. Any of your income, any of your expenses that are related to that business get picked up on that form. All of your, say, advertising, promotion, all of your business insurance, or any purchases, or any payroll, or any of those items all get picked up on that form. And at the end of the day, as the sole proprietor, you pay personal tax on the net income that your company made. So regardless of whether or not the money all stayed in, let's say you didn't take any money out from your business bank account, Whether or not that money stays inside there, as a sole proprietor, you still get taxed personally at the end of the day on the net taxable income of your sole proprietorship.
Great, thanks, Ty. We'll leave it open for another minute or two for questions. While we do that, I just want to remind everyone that we will be following up with an email this afternoon with a link to the recording. So you're welcome to rewatch it or share it with maybe somebody that you know that wasn't able to join us today. Ty's got his contact information up on the screen, so you can reach out to him directly if you have any questions or think of something after today's webinar that you might have forgotten to ask. And lastly, just a friendly reminder that we do have one more session in our Entrepreneurs Connect series with MNP taking place next Wednesday, 12 o'clock. It's on business valuations for investor conversations. So we're looking forward to next week's session as well. And hopefully, for those of you that are interested, you'll be able to join us.
So a couple additional questions popped up. So using Excel for expenses, how or where can I get T4 forms? So the T4 information returns can be obtained from CRA. So you can get packages from them. And that is one of the things, if you are using or not using a software for your bookkeeping, yeah, you'll be required to get those T4 packages. You can get them again from CRA and be able to fill those out manually. Can I use QuickBooks while I have a bookkeeper? And so little bit of an answer to that one. You can certainly use QuickBooks while having a bookkeeper. If you're using QuickBooks online, for example, your bookkeeper then has access to that information. That's all time, so they can be recording that, as well as you personally having access to that information. If you have QuickBooks Desktop, you can get versions that allow you to VPN in, or if you have Enterprise, for example, you can have the multiple users that are able to go into your QuickBooks account without actually being physically present on that computer. So you can certainly have an external bookkeeper and use the QuickBooks software to do that. And it's just a matter of which, say, for example, version of QuickBooks that you're using as to whether or not the bookkeeper is required to come into your physical location to record your transactions, or whether they can do that remotely in terms of when you send them that information.
Awesome. Thank you so much. Hopefully that answers your question. And also just want to flag, we will be hosting some sessions in partnership with CRA on T1 and T2. So that is always something that comes up in conversation with entrepreneurs. So stay tuned for more details on those as well. It doesn't look like there's any other questions in the box. It is almost 1 o'clock, so I love when we end on time, when we can get everybody back to their business or back to work. So I just want to thank everyone again. Thank you, MNP. Thank you, Ty, for the great presentation. And look for an email from the Entrepreneur Center this afternoon with all of the follow-up information as promised. Thank you again, everyone, and looking forward to seeing you next week. Have a good day.
Take care.
Take care.